All right, a lot of changes in condos. So I created a short presentation. I alluded to creating a larger presentation, and that's what this one is. So it's just going to kind of talk through in a master class type format. So we're going to talk about why condos fail, right? It's almost never about the buyer. People don't get that. It's the project insurance, the paperwork, right? So remember, it's not the borrower. It's usually the project. A perfect borrower could still get declined by the HOA's balance sheet. So what makes a condo financeable? Well, when you look at a borrower, a home buyer, credit, income, assets, debt income ratio, right? Project, insurance, reserves, litigation, owner occupancy. So how lenders review condos, right? We start with wind up work towards getting it approved. So what I'd share with you is, we go through these slides. Pardon, sorry about that. Uh, you make the offer, loan application, condo questionnaire, insurance review, HOA, financial review. And there's a lot that goes in each one of these steps. And then you get that approval. So there's a big thing now. And I want to show the defining moment here of warrantable versus non-warrantable. A warrantable condo meets Fannie and Freddie Mac guidelines. Conventional financing is available. Non-warrantable fails one or more guidelines. Requires non-QM or portfolio financing. So it's not always obvious which one you're sending in. It's good to find out what's going on with the HOA before you even make the offer and find out, hey, how could we achieve this? And understanding it may be a non-warrantable home loan, right? A lot of times what we see with non-warrantable condos, I do want to kind of share this, is it's fine. There's some litigation or pending assessment for an upgrade to the property need to be done, and it's going back and forth, but it was all cleared. But a lender had another buyer in there, not saying our company or any company really at that point, and they submit to Fannie Mae for exception. Fannie Mae doesn't grant exceptions right now in condos, unfortunately. A lot of people didn't know that. And then it ends up basically saying, okay, we can secure financing, it's non-warrantable. That's your answer from Fannie Mae. It happens. So it's good to kind of set yourself up to understand that. Now, 15 reasons condos go non-warrantable. Investor ownership is too high. Active or pending litigation. Incomplete construction. Deed restrictions, resale limits for the 90% of the units are sold. One entity could own more than 10% of the units. Commercial spaces over 25%. HOA is in control, timeshare, or it could be like a condo hotel-like usage. Single project concentration risk. HOA reserves if there's lacking there or a delinquent HOA reserve. Special assessments could be pending. That happens a lot after Senate Bill 326, right? Through things that they're trying to update to the property. Inadequate insurance coverage or failed condo questionnaire. So let's talk about SB 326. I just talked about this. California's balcony inspection law and why it's reshaping condo lending. So it's a mandatory inspection of load-bearing wood-framed exterior elements, balconies, decks, walkways, and it applies to HOAs with three or more units shared or they're sharing exterior elevated elements built before 2020. The initial inspection was due January 1, 2025, and it requires a recurring examination every 9 years thereafter. So some examples here. Here's a simpler illustration for you, but a failed element with immediate hazard finding, as we see here, can freeze financing on the entire project until repairs are complete. Right? If you look at this, that's what this is. This is an example of that. And this is for conventional loans because there are financing options available in some cases. So just as an FYI, right? So deferred maintenance is another thing. The gap between what a building needs and what's actually being received or what it's getting. Peeling paint, stucco cracks, roofing is past its useful life, aids plumbing and electrical, and underfunded reserves often hides a lot of these problems. So reserve studies, that's where you look at it. If you're below 10% funded, is definitely a common trigger for non-warrantable status, right? You want to make sure it is funded. You want to make sure that there's a reserve balance should anything happen to the property. It's covered. It's important, right? So special assessments, these are another thing. When the reserves run out, the bill goes straight to the owners. This is in effect for condos and condo owners. Here's a real example. $18,500 was actually just assessed on a client's properties. Went to each one of the units in this particular property is due within 90 days with roof replacement reserve study flagged 3 years earlier. So this could affect, if you're looking to purchase a property, your DTI, your debt to income ratio may require full pull off or payoff, pardon, by the seller at closing. And some lenders could decline the project entirely. So we look at that. This is kind of an illustration of what that looks like, right? So it kind of gives a breakdown there. Now, the insurance crisis, this is probably the single most valuable slide in this deck. Coverage under 100% of replacement costs is one of the fastest ways that a project could get declined. It's often missed, especially if the file's in underwriting and no one really looked at it, which can happen. But if it's underinsured because insurance has gone up in so much of what we do here in the state of California, this is a concern. Litigation is another one. So there are some that matter, some that don't. So if the HOA's plaintiff is non-structural, cases often qualify, but it's structural safety or habitability, they don't. You want to make sure the property is safe, that you're able to live in it, right? So here are some requirements from Fannie Mae, in case you're wondering. Their database can pre-clear a project or flag it. Even before you submit a loan, there's a PERS approval that we could check and be like, oh, cool, it's already PERS approved. Awesome. This is great. We've seen an updated questionnaire, a couple of small questions to update what we're doing for the specific loan, and it could move quickly. So Freddie Mac requirements, similar to guardrails to Fannie Mae, with a few important differences. The review type is streamlined condo project advisor. Investor concentration is reviewed, but not always a hard cap there. Insurance must match the replacement cost, and litigation, of course, is case by case by underwriting review. So FHA condo approval. FHA requires the entire project to be approved. However, I do want to say this, there are spot approvals again. In the past, there were, now they're back, where if it's not approved, there is a way to get what we call an FHA spot approval here in California. We work through the HUD office in Santa Ana, and it can be achieved. VA condo approval, similar. VA maintains its own list. The project isn't on it, VA buyer can't close her. Hard stop until it's added. And we've helped some VA buyers do this as well. So this is a PERS review I alluded to earlier. It's Project Eligibility Review Service. It's Fannie Mae's full manual project review. It's required for new construction, condo conversions, and projects that fail the streamline review. Submitted by the lender directly to Fannie Mae. It's not automatic. It can take weeks to do. 2 to 3 is generally what we've seen. Once approved, lenders can use it as well. So limited review versus full review. A limited review is when the loan to value is low enough and the project established for your documents required. It's a lot faster. Full review, so you can imagine higher loan to value, newer projects, or anything that doesn't qualify for the limited path, and full documentation is required. And this just gives some bullet points down below. Primary residence, over 90% or better, usually a limited review in most cases. Second home or investment, full review. Less than 10%, full review. A new converted product, always full review. So the blacklist, I mentioned this earlier, the no-fly zone. There's no single permanent no list, but each lender keeps its own internal list, and they don't match. Fannie Mae, as I mentioned, if you're on their blacklist, no go. But there are other investors that may touch it. So a project declined by one lender could be approved by another. List change, insurance renews, litigation settles, reserves got funded. So you make an exception in-house with a non-QM loan, right? So that's kind of a myth buster for you on that one. The turnaround, what happens when a lender gets declined? This is huge. In his favorite talk in this entire guide, a decline from one lender is a data point, not a verdict on the project or saying that loan can't be done at all. Case study, deal dies, deal closes. So yeah, deal dies. Second investor, we work with quite a few in-house. We have over 30 and we can broker to another 30 plus as well. But okay, we shop it out. Let's see who's going to be okay with it. And then that second lender's engaged, full project review, project approved, you close. Something for sellers, listing agents. Go over this with your sellers, share it with them. I can send the slide deck. If you want to just schedule a call with me or shoot me a message, you want the slide deck, let me know. I can send it out. But what to have ready before a buyer's lender ever asks. Before you list, order the condo questionnaire early. Confirm the insurance is at full replacement cost. Check for special assessments on the horizon. Pull the current reserve study. 8, ask your HOA property manager about paying a litigation and confirm the owner occupancy percentage of your particular building. Buyer checklist. Know before you go, right? Know before you write the offer, not after. Any litigation, how funded are those reserves? Is a master insurance policy lapped? What percentage of the properties in their investor owned? Any special assessments coming? Litigation? Has SB 326 inspection been completed? Listing agent checklist. Get the HOA contact information from MLS listing or questionnaire and docs before the first offer. Disclose. No litigation. Upfront. Flag non-warrantable status proactively. It makes it so much easier than going to one investor, then another, then another, then another. Trust me. Have a reserve study and budget ready to share. It's buyer's agent checklist. Confirm the project warrantability before writing the offer. Connect with me or your lender during the inspection period. Find the stuff out. Legwork. That's what we like to do, right? Request a conduct questionnaire on day one. Build in a financing contingency long enough for project review. So if it's not with us, make sure you're in touch with your loan officer to find out what that looks like. Ask your lender for a pre-underwrite on the project, always, if possible. So how we review condos before writing offers. This is what separates us from almost every other lender. We pull the questionnaire before you're under contract. We run agency lookups the same day. We flag red flags before they come into client loan. We know which lenders still say yes when others say no. Timeline, offer, HOA docs, questionnaire, review, approval, close. High five. Frequently asked questions. Can a non-warrantable condo be financed? Does lawsuit always close the loan? How long does a full project review take? Can I use a cash offer to skip the review? Answer is that yes, obviously. 5, does FHA approval expire? What if the HOA won't return the questionnaire? Ooh, think about that one for a second and just pause there, right? But can one lender's approval transfer to another? Does special assessment have to be paid off? Is a site condo treated differently? What's the fastest condo type to close? Just so you know, number 10 used to be 4 units and under. Now it's 10 units and under. They updated it this year, January 2026. You don't need a condo questionnaire for that one. Still good to find out all these things. You want to make sure you're buying your protected asset, right? Real files we closed, SB 326, non-warrantable. We closed on litigation, special assessments, PERS, of course, and portfolio. Questions? Free condo review? Send me an address, shoot me a message. There's my contact information. There's a link below to schedule a call with me. I would love to talk with you. Here to help.